Hi everyone and welcome to my morning report chart appraisal on Tuesday 4th of July with me, Rich Perry Market Analyst at Hantec Markets. We've got a market that looks a fairly bit cautious today. Basically what we have seen overnight is sort of a move in towards safe haven plays really. You can see the yen which is strengthening against the dollar and also gold which is pulling higher as well. Now that is coming as North Korea has launched another missile and it's landed in Japanese waters. Now the sort of geopolitical sort of tensions that arise from these events tends to be to move investors in towards safe havens, and that seems to be the case. And you've got a stronger dollar as well, the euro lower, sterling lower, and also the commodity currencies broadly lower as well. What you've also got is the Aussie dollar sharply lower today because we've had the RBA out overnight. You had last week a whole raft of central banks moving towards certainly a less dovish sort of stance on sort of monetary policy going forward, and it seems as though that the RBA has sort of passed up that opportunity to join them. It sort of remained as was really on its stance on inflation and the Aussie, and also sort of talking about pressures on real wages as well. So certainly it looks as though the Aussie has been sold in on the back of that, and that's quite a significant move lower. What we have got today is Independence Day in the States, so we've got a relatively sort of reduced, or what we could see as a bit of a quiet session potentially. There's no data apart from that. We had the UK construction PMI data, which mildly missed estimates, but construction is basically around about 6% of the UK economy, so it doesn't really have any significant impact on sterling. But generally speaking, we're sort of going on to a more sort of cautious sort of market today. What we have also got, sorry if I can get my board up again, our equity markets slightly lower as well, pretty much across the board, and that's coming as the S&P 500 last night rose quite strongly initially and then sold off into the close. So yes, it did close higher on the day by 0.2%. However, it was a pretty disappointing close, and that sort of disappointment has again filtered through into the European session. So that takes me on to my chart of the day, which is the Kiwi. Now, as I said, the Aussie has started to fall away. And let me show you the Kiwi. Kiwi yesterday started to put pressure on this uptrend that has been in place for 7 or so weeks, and today that sort of continued move to the downside is suggesting that the sort of run higher has run its course now. I think it's lost impetus. Look at these momentum indicators. RSI back below 60. It's not been below 60 for a number of weeks really. The MACD lines as well, having plateaued, are now starting to fall away. The stochastics, sort of mild sort of negative divergence as well on the stochastics. So you're sort of putting pressure back on the downside, and I think it's ultimately a trend line break, which doesn't necessarily mean you're going to be falling sharply. It sort of could suggest that the market is now sort of beginning into a sideways phase. So you start to look for top patterns and breaking of key reaction lows within the uptrend. Your initial reaction low, I suppose you could argue, is 72.50, but the main ones sort of come in with these sort of support around 71.95, and you could argue sort of back towards, I say, 71.70. So the initial support to watch out for is 72.50, because that arguably does complete a little top pattern, and you can show that on the hourly chart, whereby you had that sort of move to 73.45. a couple of occasions, which has rolled over and subsequently moved lower. Now what we have got is this sort of neckline around that 72.50 mark, which has yet to be tested, but you look at the momentum indicators on the hourly, the MACD lines far less positively configured now, aren't they? So they're certainly suggesting pressure on that support, as is the RSI. Tends in the last couple of days to be sort of rolling over around the 50 mark, the 60 mark. So it looks like rallies are being sold into now. Looks like rallies are now being sold into. So I would say so that the pressure is sort of growing back towards a test at 72.50. If that breaks the downside, you've got a completed top of around about sort of about 90 ticks or so of downside correction. So that would certainly bring you back into a real test of that support band 71.70 up towards 71.95. No explicit top pattern completed yet, but that would certainly be the beginnings of a sort of a corrective move if that were to be seen. A break below 71.70 would certainly bring in a correction, but these momentum indicators look to be sort of increasingly sort of correctively configured for now. So with that in mind, I wish you good luck in your trading, and I will speak to you later. Thank you.